Okay, welcome back to Around the World with Dane Waters. I was just having some random idle chat with my wonderful guest, Stephanie Barello. Welcome, Stephanie, to the show.
Thank you, Dane. Thanks for having me back. You haven't fired
It's,
me yet.
no, well, listen, it's always a pleasure to have you. It really is. So Stephanie is the best economist, the smartest economist I know.
I'm the only
Um,
one.
okay, I wasn't going to say that, okay, but it's true. It's true. You're the only, well, actually, no, I know another economist. I know John Matsusaka. I
Okay.
know two economists, but you're nicer than he is. So he's an academic. Like, oh. Anyway, sorry, John, if you're watching the show about that. Um, so let's start it here. We're going to talk about the Federal Reserve today, among many things. Now, to the audience, as soon as I said the Federal Reserve, they probably just tuned out, but let's make it exciting for them because the Federal Reserve, believe it or not, actually is a very important part of the US government. So help us understand exactly what the Fed is.
Ooh, well, should we talk about what the Fed is? Okay, so the Federal Reserve is the central bank of the United States. And they do two things. They are the bank of all of the bankers in the United States, and they are the bank of the federal government. So that's the bottom line up front. And the big things that they provide is they are there to provide stability for the US financial system. And they are also there to provide stability to the US economy as a whole through different monetary policy tools, which we can talk about if you would like.
Well, I definitely would like, so basically, is a bank, can we go rob the bank? Is it a bank we
Sure.
can rob?
They have assets, yes. If you want
They've
to
asked,
mean by
okay,
that.
watch out, Fed. Because I've never heard of anybody robbing the Fed. I mean, well, maybe they have. Maybe there's a
Maybe
movie
I
about that.
don't know.
Hmm. Okay, so the Federal Reserve, though, is the nation's bank. They also set it's an independent. It's independent, right? It's not. They're not. They don't report to the president. They don't report to Congress. They're totally independent, supposedly, right?
Yes. So, in fact, the Fed is probably one of the most independent, you know, I guess you could say agencies, organizations, I don't know what the right term is, of the US federal government, right? So it's constituted of three different pieces. And it was intentionally designed to be as apolitical as possible, hence why, people say it's really independent. So there's the Board of Governors, which sits in Washington, D.C., and they are appointed for 14-year terms by the president, but the terms are staggered, right? So a 14-year term is longer than a normal, U.S. presidency term length. And because the terms are staggered too, it means that there is, multiple presidents who have their hands on, on appointing who sits on the current board. The Senate also has to confirm them as well. So that's one piece is the Board of Governors in DC, appointed on, varying time frames. And then you also have the regional banks. So there are 12 Federal Reserve regional banks around the United States. So you have the interests not just in Washington, but also around the country. And then from those two groups, there is the committee that sets monetary policy, which we can go into depth if you want to as well. It constitutes the Board of Governors in DC and then different rotating members from the regional bank. The president of the Federal Reserve Bank of New York is always on the policy making committee, so that they kind of represent Wall Street, right? And they are listening to Wall Street. Wall Street's listening to them. So yeah, it's an incredible design, and it was designed to be apolitical so that the Fed can make decisions with regards to the financial system and monetary policy without political influence, right? Because political influence might not lead to the best economic choices in the long run. So that's why it was designed the way it was.
Okay, so one of the biggest things that the Fed does, and this is why it's important, I think, that it be independent, is that they set interest rates, right? So okay, help us understand when they set interest rates, what interest rates are they setting?
All right, so I won't go into too much of the details because I don't want to bore you to tears on this time.
You
But
never
yes,
bore me, Steph. Never. Go ahead.
yes. So they target a particular interest rate, right? The federal funds rate. But then what happens is that when they target this interest rate, it has an impact on interest rates all over the economy, right? And actually, in fact, not just in the US economy, but the world as a whole, actually, because the US dollar is the world's reserve currency. Anytime that we adjust, interest rates in the United States, it actually impacts people's interest rates and borrowing costs and exchange rates overseas as well. So what happens is the Federal Reserve target a particular interest rate, and what they will do is if they feel like the economy is struggling, they will lower the interest rate in hopes that it will kind of, provide incentives for banks to lend out the money and for consumers to borrow it, to buy cars, to buy houses, to start businesses as well. And then on the flip side, if they want to, say, cool down the economy a little bit, what they will do is they'll raise interest rates. Now, it's not just about, helping the economy to boost it a little bit or to restrain it a little bit. And that you can think about that as, affecting jobs, but they also use those same tools to control inflation. So whenever inflation is running high, the interest rate will raise interest rates to discourage the creation of, I guess I have to explain this is anytime, and I'll go from the worst case, anytime that the Federal Reserve lowers interest rates, what happens is when banks are encouraged to lend, it actually increases the money supply. And because they initiate a loan that's deposited in one bank, they keep part of it, they lend it out to another bank, and it actually leads to an expansion of the money supply. And anytime you have a larger money supply, each dollar is worth less, and that means that there's inflation, right? So they have to balance all of these different forces, right? They have the state of the economy as well as inflation. So if inflation is running warm, you could say, or if it's high, they will raise interest rates to try to slow down the growth of the money supply so that the value of the dollar doesn't, decrease by so much and lead to inflation. Does that make sense, Dane? I hope I explained that
Well,
okay.
it does make sense, and I wanted to understand that because yeah, so the whole inflation part and why they adjust interest rates based upon to control inflation, but when they set these interest rates, for example, it also for a very layman like me, I mean, this is why like when you get a credit card, it says that your credit card rate is the Federal Reserve rate plus what X, right? So
Mhm.
like on a credit card, for anybody who has a credit card out there, God forbid I got too many of them, but it says so whatever the base rate is, and then they'll add, and then the bank itself, the credit card, will add percentage on top of it, which is their profit, I guess, their profit. And so if interest rates are raised, the amount of interest you're paying on credit card debt increases. Also, the amount of on home loans, right? So if
Mhm.
if they raise the rates, then the amount of interest you pay on home loans increases, which I believe that as they increase rates, diminishes the number of people trying to buy homes because
Right.
interest rates are higher, right?
Exactly, exactly. And so that is done usually to counter inflation, right? If they think that inflation is speeding up too fast, they try to, I guess, rein in the economy a little bit to try to bring inflation down.
And what is so when there's inflation and there's too much money in the market, like there's just too much cash, for some reason that cash doesn't fall on my head. I don't know why, but when there's too much cash out there, does that also it causes goods and services to increase in cost as well? Or does inflation, when you talk about inflation, does it increase costs to the consumer?
Right. It means that you need more, when there's inflation, it means you need more dollars in order to buy something. So, and I don't know how things are going in London right now, but in the United States, we've been feeling this. It's requiring more and more, dollars to buy food or eating out. Um, all those things that it trickles throughout the entire economy because there's a difference between, say, a price increase in a particular, industry and then for the economy as a whole when the whole price level raises. And so yes, so anytime there's inflation, it means it costs, you could say costs more money. There's more dollars you need to buy goods and services.
Okay, well, I want to come back to the Fed, but I do want to ask you this question about, you bring it up about the U.S. economy. You have President Trump talking about how it's a great economy. Everything's great, great, great. I think, I'd like to have a dollar for every time he uses the word great. I'd be a multi-gazillionaire. There's no doubt about it. But how is the economy in the United States?
Well, the economy, I would say, I mean, I've heard people use different terms. Some people say it's surprisingly resilient. Other people have said that it's anemic. if you look at the data, especially if you look at, say, jobs over the past year in 2025, what was interesting, because now we have a whole year's worth of data under the Trump administration. What's interesting is most of the job gains in the past year were actually concentrated in the months leading up to when the tariffs were announced. So since then, it's been very weak and very anemic since then. Now, that being said, there's also other things going on right now. We have AI, and people are trying to figure out, okay, how much of the impact on job growth is coming from AI as opposed to the tariffs, and trying to disentangle all these things. But essentially, the United States economy, the industry that is adding jobs is healthcare, and everything else is not adding as many jobs. So the economy is not soaring by any means. We're not in a recession, but we're also not, you know, are not doing amazing as well. So that's the
Well,
state
let's
of the
extrapolate.
economy at the
Well, let's
moment.
extrapolate out to the global economy. I mean, what is your take on the global economy right now?
Right. Everything that's happening right now, I would say the hesitancy that's happening in the United States, it definitely has an impact on other countries as well. And so I would have to look and see what the particular economic forecasts are. But you can think of an alternate scenario of, what would the economy look like if under more certain policies, circumstances, by the United States. So that's all I have to say about the global economy. But tell me, how are things in London? What's going on there?
Same as everywhere around the world I travel.
Just
All
kind
the
of
prices are increasing. The cost to fly is increasing. The cost to eat out's increasing. I mean, the cost of a taxi is increasing. Everything is just crazy around the world, no matter where you're going. Excuse me. Let's go back to the Fed, for example, because we talked about the independence of the Fed. Yet President Trump is he tried to fire or did fire one of the members of the board of governors, and I think it went to the U.S. Supreme Court.
right. And I think if I remember, so I've actually my facts be wrong on this, but I remember that wasn't able to happen. And the other thing that has happened as well that has been interesting when it comes to Fed independence is the administration opened up an investigation on Chairman Jerome Powell and their renovations of the Federal Reserve. So, why did that happen? President Trump has been pretty clear on his social media that he thinks that the Federal Reserve needs to lower interest rates by a lot, right? And his reasoning is that if we have lower interest rates, that means that our cost in the United States would be a lot lower. So it helps us with our problem of US deficits and debt, which we've talked about before, right? Um, and he hasn't been pleased because the Fed hasn't been lowering interest rates like crazy. And in fact, in the meeting last week, they held them steady. And he called Chairman Powell a moron, I believe, on True Social, whatever it is. So, but the problem right now is the Federal Reserve. I kind of talked to you how they have this dual mandate of okay, maximizing employment in the United States, but they also have to take care of inflation, right? And sometimes those goals don't go against each other, but sometimes they do. And right now there is that balance where if they stimulate the economy too much, it actually may lead to inflation. So that's why the Federal Reserve hasn't lowered interest rates any further because to do so would actually spark more inflation, which nobody wants, right? And so what's interesting though is so the administration announced an investigation, and I thought this was actually really stunning. Is they actually the Chairman Powell made a statement about it, and I'll just read part of it. I printed out because I thought it was really interesting. He said, "The threat of criminal charges is a consequence of the Federal Reserve setting interest rates based on our best assessment of what will serve the public rather than following the preferences of the president." So they basically said, we understand, and they said it publicly, we believe this investigation is politically motivated to try to push us to conduct monetary policy in a certain way. So that's another very prominent thing going on right now. And last week, so Jerome Powell's term expires in May. And Trump has appointed someone new to be the new chair of the Fed. They have to be confirmed by the Senate. And luckily, that pick, I think, was okay for Wall Street. It was, and I can give more details about him if you want. But he, in the past, has actually been very hawkish against inflation. So I think that's why people think that he's an okay pick. His tone has changed recently, but there's some nuance about his stances that mean that Wall Street expects that inflation won't run rampant because interest rates won't be pushed too far down.
I think it's important for the world to understand that the Federal Reserve, once again, as we talked about at the beginning of the show, is one of those institutions that really has an impact on the global economy. And this whole thing about these interest rates, I mean, you think about it, something very simple. People think setting an interest rate, whether it's 0.5, 1.5, 2.5, 3.5, it really impacts the entire economy. And on job growth, for example, so I would imagine if they, in theory, is if they cut the interest rate and there's more money for companies to borrow, which means in theory they can hire more people, right? So a lower interest rates could stimulate growth in jobs. Is that the way it's in theory? And
Yes,
is that what
yes,
Trump is
that's the
thinking?
theory.
Is that,
Yes.
yeah, okay. Yeah.
Assuming that banks and consumers respond that way, right? They could lower interest rates, but banks may want to say, we're nervous. We actually don't want to do that. So it all depends on, banks and their response also to interest rates and how sensitive they are to those changes. But yes, that's the theory.
Mm. Yeah, well, it's very complicated, I tell you. And listen, hats off to Jerome Powell for standing up. I mean, I think it's amazing that he is. I mean, most people I know that I've talked to have a tremendous respect for him, and it's a thankless job. I mean, really, when you think about it, all you do every day is you think about the economy and you think about interest rates. Boy, I bet you he's a stimulating conversation at dinner party with him.
Oh, yeah.
Um, but listen, Stephanie, I really appreciate it. Sadly, once again, we're out of time. It's always a pleasure to see you, and I always appreciate you getting up early in the morning to talk to us. So thanks a
Of
lot. And
course.
yeah, and tell the family I said hello, because I can't talk to them any other way other than and than to go through you on this show. So it's just crazy. Anyway,
At 1 a.m.
thanks
when
a
they're
lot.
all asleep.
Thanks for being here with me. Let's take a quick break from the show, and we'll be back with our next guest.
Right. Bye, Dane.